what is open interest? Open interest is total number of options or futures contracts that are outstanding in a particular trading cycle. That means at any given time or at any given period, the number of contracts which are outstanding, right, which are open, are called as open interest. So if we see this example, suppose if A buys one option like here and B sells one option, right? So one buy and opposite one sell will comprise of one open interest, one contract, right? Each contract has two sides, buy side and sell side. So one buy and one sell which are open. So buy is open of A and B is sell is open of B. So it will comprise of one open interest. Suppose next day C buys three options and D sells three options. So what has happened? Three new contracts have been opened by C and D, right? We had previous day one open interest plus three new contracts opened by C and D. So total open interest will be previous days one and today or next day three. So total open interest will be 4. Suppose on next day A sells one option and D buys one option. So what was A having position here? A was having buy position. So he sells, and D was having sell position. So he buys, right? So one open interest is reduced, that is 3. What happens next day? E buys 3 options, right? So it's a new player entered, but C has closed 3 positions. So 3 opened and 3 previously open are closed, right? So that will nullify and open interest will be 3. So even if you don't get the reason behind this or how it is calculated, important is we have to know that open interest holds importance in analysis, right? That's the most important takeaway from this. So if we see on auction chain in NSE, we'll go directly to NSE. So are you able to see browser NSE? So even if we type Nifty option chain, right, the first NSE India link will take us to auction chain, right? So here, this is strike price, bid quantity, bid price, ask quantity, change, last traded price, right? IV, volume, change in OI and OI. So right side is off, as we have seen in last session. Right side tells us about what? Can anyone tell? Yes, put. Right side is of put and left side is of calls. You can see here it's written call and put, right? So the last column is OI, that is open interest, and on this side also last column is open interest. So if I scroll down, where Nifty is trading currently, Nifty is trading at 17,369. So what will be the at the money strike? Can anyone tell? 17,369. Yes, 17,350 will be the at the money, right? So if we see, we have seen that this last is open interest And previously it was giving total quantity, but now it is giving total contracts, that is lots, number of lots open. So if I see 17350 has 68,000 open interest on put. So each strike will have different open interest. That means there are 1,380,000 contracts open in 17,300 put. Are you getting it? Right. So which is the highest open interest? If we see, right, it's in 2000, it's in 2 digits, 6,000, 3,000, 25,000, 33, 36, 42, 42, 79. Right, 79 is 17,000 and 17,300 is 1 lakh. Next is 68,000, that is 350. So highest open interest is 17,300 put. Are you getting it? Highest open interest on the put side is at 17,300 put. Similarly, if we see on the call side, 27,000, 17,000, 31, 59, 1,20,000, 45,000. So what is highest open interest? Is at which strike? It's at 17,400. Right? Highest open interest on the call side is at 1,20,000 contracts at 17,400. So what does this indicate? Usually the build-up of open interest is done by institutes, right? And mostly the institutes are option sellers, except for hedging. Mostly the institutes are option sellers. So highest open interest at particular strike price on call is likely to be resistance. Highest open interest on the call side, that strike is likely to be resistance. So what is the resistance now? So resistance as per open interest is 17,400, right? Because that has the highest open interest. While highest open interest on the put side is likely to be support. So that put is being shorted by institutes, right? 17,300 is highest open interest. So we are seeing this option chain of which expiry? It's 9th September, right? It's 9th September. Why it's showing 9th September? We have to check for 16. We'll just check because that expiry has already gone. So you can see that was actually 9th September and Nifty was in that range, right? We have to check for the upcoming week, 16th September. So if I check on the 16th September, highest is 64,000 is at 18,000. 29, 27, 38, 51 is at 17,400. So highest is at 18,000. Right? 64,543. So 18,000 is resistance as per 16th expiry option chain. If we see on the put side, 24, 65 is 16,500. Right, so that's highest. So the range is too wide for a weekly expiry. I don't know why this much wide range is there. Because we are hardly 4 days away and the option sellers have sold 16,500 put, right? 16,500 at 65,000 and 18,000 at 64,000, right? So range is 16. I don't know if any news is going to come and volatility is expected. That's why they have sold 2 out of money call and put. right? So this is one place where we can look for open interest. So what is how to look for open interest in NSE? Any confusion in it? Similarly, we can get it in Opstra website. So if I open this Opstra website, you can see here open interest, right? If you click on this, click on the open interest. This is 9th September, we will change it to 16th September. So you can get a visual impression, right? If you take here, you can see obviously the green highest, biggest bar is at, here it's written down 18,000, right? 18,000 is the highest call side open interest and 16,500 is highest put side open interest. So we can get the visual impression on the Opstra. What is so next is change in open interest. Change in open interest suggests interest of more traders at particular strike and probability of that strike price to become support or resistance increases. So this also we can get on Opstra as well as on NSE website. So here on the downside we can see this is open interest and this is change in open interest. This second bar which we are seeing is change in. So we can see highest change in open interest is at 18,000, right? So that contract has been added with more open interest and put side 16,500. Actually there is no such indication that why, because if we see in the option chain, they are priced at what level, right? 2 rupees 65 paisa and 2 rupees 70 paisa, 18,000 call with highest open interest and change in open interest is 52,000 loss, right? And 16,500 is priced at 5 and 6 rupees. So there is something we don't know. Probably that before this Thursday some wild move can be seen, right? Some wild move can be seen. So either they are shorting very wide or someone is buying very huge quantity of penny option, right? Someone is buying very huge quantity of penny option. So even if we can give it a try, 17,000 is at 19 rupees. On tomorrow it will be dropping, say around 16 rupees or 15 rupees, and around same level is 17,600. So 20 multiplied by 50, right? So around 2,000 rupees risk and buy both, and forget it as lottery. We have taken a lottery of 2,000 rupees. If some move comes, we don't know. So we have to see tomorrow morning how market behaves, and we have to decide based on that, right? But it's not making sense that weekly option is having very high open interest at these highest price, right? It's not seen usually. So change in open interest, we can see this second column on the right and on the left, or you can see it in Opstra direct, right? Change in open interest. So this addition will tell us whether which strike is having more interest. So if we see in single day, the change in open interest on the call side at 18,000 call is 52,000 and total open interest is 64,000, right? So almost we can say 80% open interest has been built on Thursday, right? Because Friday was holiday. So 80% of the 64, out of 64, 53,000 almost is built on single day, right? So someone is interested in 2 rupees 65 paisa. That will be giving 100 rupees per lot. Not sure whether someone is selling for 2 rupees. And 16,500 is also same. 65,000 is total. Out of that, 56,700 is built on single day on Thursday. Right. So we have to keep watch. If we see inside market moving rapidly, we can look for buying option also. Right. On that direction. So if it starts going down, we can buy some put, and if it starts going up, we can look for buying some call. Okay. So this is showing us that there is some interest at this level. If it would have been priced at 30 rupees or 20 rupees 2-3 days prior, then the interest is more in selling. But 2 rupees, I don't think someone will be that much interested. So let's see how tomorrow it unfolds. So change in open interest. Next is Max Pain. Next is Max Pain. So what is Max Pain? Max Pain is strike price where most put and call contracts are open. At this strike price, at this strike, expiry will cause maximum loss to the option holders or buyers. Right? So Max Pain, what it gives us? It tells us which is the strike price where maximum option buyers are standing. That means it might be 17,000 put buying, it might be 17,100 put or 17,000 call, 17,500 call, 18,000 call. So maximum number of buyers will make losses. That is called as Max Pain level. So how Max Pain is calculated? Right? Max Pain is calculated for each in the money strike price for both puts and calls. That means currently 7,350 is at the money, so 17,300 and below, right, will be all in the money calls, right? So 17,300, 250, 200, etc. So for all those, as well as puts, means 17,400 and above, all the puts, we have to find the difference between stock price and strike price. Multiply the result by open interest at that strike price. Right? So whatever open interest we are getting, we have to multiply it. Then add together the dollar value for the put and call at that strike. Don't write this down because no one is going to do it. It's not possible. Add together the dollar value for put and call at that strike. Repeat this for each strike. And find the highest value strike price. That's called as maximum. It's complicated, right? So we need not calculate it. It's readily available on the Opstra. So this was old. We'll just go to the current Opstra 16th expiry, which we have seen. Right. So this is 16th expiry Nifty. We can see here open interest, and here if we click, it will be giving us Max Pain. So what is Max Pain? Max Pain here for 16th September expiry is 17,300. Right. So what's the aim of institute? When buyer of options will lose money, who will be getting the money? Who will be getting the money? The money will be earned by institutes which have shorted those options. So they will try to bring it near the max pain. They will try to make that particular index, particular stock to expire around this, not exact level, but it might be 40-50 points around that. So between 17,250 to 17,350, they will try to make Nifty to expire, right? So we are getting max pay. This we can use when this max pain is strong, right? Means it usually doesn't change because for each strike it is calculated. So whenever there is major shift in the max pain, means if this max pain, if we check for 23rd September, the max pain is 10, right? We check for 30th September, max pain is 17,150. So if Nifty moves in this week, right, and 16th won't change usually, but when if 23rd shifts downward, max pain to 17,200, and this monthly shifts again downward, then there are chances that market can give correction, because shifting of max pain requires all the strike change in open interest, right? Maximum strike change in open interest will cause shift of the max pain, right? So that's the importance of max pain. We have to keep watch on max pain also. Then next is put call ratio. Put call ratio is total put OI divided by total call OI. So put call ratio helps to get an idea of market sentiments and find support and resistance. So PCR of 0.5 to 0.8 suggests oversold, and PCR of 1.25 to 1.5 suggests overbought market. So if we see, this is the OI column, right side, right? So total OI here and total call OI, open interest, is on this side. Right? So 23, 35, 74, 00 divided by 1919, 2800 will give 1.22. Right? So that PCR does not have any much importance. We can say still market is bullish. So if we see the current PCR of 16th September, how we will calculate the PCR here? 495, 641. So roughly 495 divided by total call open interest, that is 436. Right? 495 divided by 436 is 1.13. It's 1.13. So market is still not overbought, not in the overbought. But when we can say this, if we have tracked this PCR daily. Right? Because if it is coming down from 1.4 or 1.5 PCR, if it's coming down from that level, then market is in correction. Right? So we cannot give it standalone. We have to check this daily once. At the end of day also we can do. So if PCR is between 1.25 to 1.5, and if it's going above 1.5 or 1.6, then chances of reversal are very high in market. And on downside, 0.5 to 0.8 suggests oversold, right? Got it? This is for cumulative PCR, that is total put of all the strikes summated, summation of total put open interest of all the strikes and total call open interest of all the strikes. That ratio will be used for this 0.5 to 0.8 for oversold. That means chances of market going on upside from the correction phase are high, and when it goes higher side between 1.25 and if it crosses 1.5, then chances of reversal are also high from upward to direction, trend reversal. That was for cumulative OI, right? But PCR of individual strikes, so less than 0.6 PCR suggests strong resistance, and more than 1.8 PCR of individual strike suggests strong support. That means if 12,000, here it was 34 lakh 25,000 and 12 lakh 84,000. So 2.64, 2.67 was PCR. So that was 1.8. So in this 12,000 was support. While here it was 4 lakh 13,000 and 27 lakh 53. So PCR was 0.15. So 12,500 was resistance. If we check the recent this also we need not calculate. If we go to option chain, open interest, right? This brown line is PCR. Brown line is PCR. So if we are checking for 16 September, this is highest PCR. Highest call OI is at 18,000. So what is PCR here? You can see in this rectangle which is coming written down, third from top, PCR 0, right? Are you able to make out? PCR 0. PCR 0 means this level is strong resistance. So I am not interested in this because it is priced only at 2 rupees. Right? So 100 रुपए में मुझे कोई इंटरेस्ट नहीं है. So second highest OI is this 17,400. What is PCR here? .46, right? So 0.46 is below 0.6. So 17,400 is strong resistance as per PCR. Since it's below 0.46, 17,500 is also strong resistance. As we go higher, the PCR will be dropping. You can see 0.05, 0.01, 0.16 and 0.46. Now highest is this side. PCR here is 10. PCR more than 1.8 is strong support. So 16,500 is strong support. But am I interested in that level when Nifty is at 17,350? No. So second highest is 17,300 PCR. What is it? 1.6. So is it strong support? 1.6. $17,300. Is it strong support? No. Why? Because we need more than 1.8. So third highest is 17,300. Where PCR is 5.1. So I can say that Nifty on 16th September likely to be remaining in the range of 17,200 to 17,400. Right? It can remain in that range. So PCR will be giving us that idea. Clear? Any confusion in PCR? Total PCR, the values are different, and individual strike PCR values are different. So lower the PCR, stronger is the resistance. So we have kept a mark of 0.6, but if it's 0.3, then that strike is more stronger resistance than 0.6 PCR strike. Right? Similarly, 1.8 is strong support, but if we are getting 3 PCR, then that is a stronger support, more stronger support. Right? So as the PCR of individual strike increases, the support grows stronger. As PCR of individual strike decreases, the support, resistance goes strong. Clear? Any confusion in this? Okay. Okay.